In school, we are never taught financial education. We don't learn how to negotiate. We don't learn to establish networking skills. Nobody teaches us how to set up a business. We aren't able to take the time to have the foundational principles of success because we are focused on academic studies, which are largely irrelevant for real life. Robert Kiyosaki has made a huge impact on financial education by teaching how to shift the paradigm that we are taught. We are simply told to get a job, invest in a 401k in a diversified portfolio of stocks, bonds, and ETFs, and work until we are 65 and live happily ever after. But what if there was a better way? You came here for the truth, so let me unveil that for you. Today we are talking about how to protect yourself from financial crisis and understanding the principle of unknown variables. To the average person, this may make no sense whatsoever. They are simply taught, as I said a moment ago, get a good job, invest in a 401k. That's all they know. They are too busy with their daily lives and there's no possible way that they can look into it any further. For the people that do, they start to realize that there's more to this than they have come to understand. I'm going to get into some of the details today. I have a lot to cover, so I want to move through it quick and hopefully be able to give you a few good points of information. First things first, we need to understand what the current environment is. At any given moment, where you are at, you need to understand all of the variables that are out there. Understand where it's headed. Where are you now and where is it going? What's going on in the stock market? What's happening in the economy? What about the jobs? Are you currently employed? Are you underemployed? Are you facing a personal crisis that goes beyond what you are seeing in the vast majority of people around you? All of these questions are variables in an equation. Only you can answer those. But above all, time is the most important factor. How much time do you have until you no longer have your primary source of income? You need to ask yourself that question. If you are currently 50 and you intend on retiring when you're 65, your situation might be different than somebody who is currently 25 and intends on retiring at 65. How much money that person makes in a given year, how much debt they have, what are their expenses like? There are so many questions here. And at what age will you run out of money in a best or worst case scenario? The average person has never thought of these things, and yet they are so basic. The estimation is that you have been working all this time. When you retire at 65, you're going to have enough money to live. But so many people realize that when they get towards that age of 65 or whatever age they intend on retiring at, they begin to realize that they don't have enough money. Big problem. Making sense of your finances, you must address these factors. What assets you currently have? Do you have some stocks? Do you have real estate? Do you own your personal residence? Is there anything around the house that you have of value? All of these things need to be tallied up, and you need to understand your current assets and liabilities. You need to know what you want to risk. Maybe you're willing to take a risk on certain assets, but you want to protect others. That's the next point. And what are your goals exactly? Some people may want to put everything they have towards something very risky in order to perhaps gain the most amount of appreciation. Other people might be more comfortable having their money under their mattress. It all depends on your personal situation. Nobody should be judged for what they do with their money. They need to be responsible for it. That's what this is all about. That's what the Money GPS is all about. It's about understanding this really unknown topic of financial education. Once you have the understanding, you're going to be able to make the right decisions, or at least you'll be able to ask the right questions. This is really what I wanted to get into, and that is the unknown variables. The majority of people have a very simple plan in mind. For those that save money, they work a 9-to-5 job, they invest in a 401k on a predetermined basis and intend on taking from that pot of money when they retire. But there's just one problem. There are assumptions and unknown variables in their shallow thought process. So hear me out for just a second, okay? Can you answer these two questions questions honestly. What will the value of your assets be at the time of retirement? So remember, previously we were talking about your assets. You total that all up. Maybe you have some stocks, maybe you have a piece of real estate. If you want to include your own home, that's a whole different story. Other things around your house and so on. What will the total value of that be at the time that you retire? And the second thing is, what age will you die? You have to tell yourself, you have to be able to predetermine what that age will be. Can you honestly answer either of these questions? Predicting the unknown. These are impossible to determine. No person has the ability to know these extremely important pieces of data. Without those, this typical plan suddenly seems so unwise. If you're putting money into a pot, hoping it will be there for you to take from when you retire, but at that moment you need it, the value is reduced by 50%, you will not be able to retire, plain and simple. But think about how many people are doing this every single day. If you need to retire due to health or family issues at an earlier age, what is the current status of your investments or the markets? You can't possibly know that from where you are sitting today, especially if that is a very long time frame. The thought process is simply that on a long enough timeline, I'm going to be better off invested in my 401k than not invested. But of course, there are so many unknown variables that people never factor in. On the other hand, if you end up living until you're 120 years old, you will not have enough money to take from because the pot will be emptied before then. And of course, I'm making an extreme example here, but I don't think a lot of people have put that into their thought process. Navigating the financial highway. So what can people do? This is the question everyone would like to know. People need to understand the work of Robert Kiyosaki. He's famous for Rich Dad, Poor Dad, his book. Although that's a great place to start, it's wise to learn from his other work too. He teaches the principles of multiple asset classes in order to withstand downturns, pay the lowest possible taxes, and provide the highest possible income. Kiyosaki has the most well-balanced strategy for proper wealth management, which although short on technical analysis, it's built on sound principles that stand the test of time. I know many people have read Rich Dad, Poor Dad, but there are so many out there that he's written over the years, and I think they're really good. Like I said, it's not all about the technical analysis. He's talking about the principles, and those are really what people need to understand. The day-to-day analysis is really not as important. 401 okay? If you are working a 9-to-5 job, you need to invest for the future. We all know that. It's crucial. However, the asset class which is most widely marketed is undoubtedly paper assets. The commercials, the advertisements online, the articles, the TV shows, all heavily focused around paper. Even the means at which people can buy paper have become so easy. An app installed on your phone is all you need to begin investing. Your employer will often match 401k contributions. Fantastic, right? But what about the unknown variables? You are simply leaving it up to central banks to ensure your future is handled. That is such a big risk. Most people have not factored this in at all. The 4 asset classes. Kiyosaki has always talked about the importance of the 4 asset classes, and I would go even further as to breaking down each asset class and diversifying within each. Each has its own unique benefits that are often overlooked by most. Just a simple example here, if you're going to invest in stocks, do you simply buy just one stock? Is that really a wise thing to do? Or are you going to have a portfolio of stocks and go even further than that? Are you going to hold just equities, or do you want different types of paper? It makes sense to diversify, even though that doesn't create the largest amount of appreciation. When you have wide swings, when you have downturns, when you have turbulent times, you're going to be better off by diversifying. That is a simple principle. Paper assets. If you're investing in paper, you cannot simply chase maximum appreciation. Same with real estate. You need passive income as well. When you're 65, you will start to sell your 7 shares of Amazon? Or do you want to hold a stock that will pay you regularly from now and beyond? Which seems more wise when considering the future unknown variables? This is a principle that everyone needs to understand. Having that passive income is going to help you not just today, but it's going to help you in the future too. Remember the pot of money that you have there, and you're simply going to be taking from that. You don't know what the future has in store. Business. People forget about business because they work a 9-to-5 job and believe they don't have the time, the knowledge, or the skills to start their own business. But this is simply untrue. There are thousands of fantastic resources online to learn about to be able to provide yourself with income. Even if it wasn't a very large amount, some monthly income would always be welcome. Nobody's going to turn down some money. Not to mention, when you produce an income in business, you are taxed at the lowest possible levels, unlike with paper assets. If you're working a 9-to-5 job, for example, you are taxed based on your bracket. But if you are in business, there are different ways to shelter your taxes. Corporate taxes work a lot different than your personal income. Of course, you can write off things. There are many different strategies here that companies are using every single day that are completely legitimate, and as a 9-to-5 employee, you don't have any of those advantages. So that's why the business asset class is advantageous in so many different ways. Precious metals. Kiyosaki teaches something that I have always tried to repeat. Precious metals are for saving, not for making money per se. If the central banks are printing money, you don't want to save it. So you invest in real assets. Precious metals provide the best means of saving money. The optimal timeline for holding would be infinite. This is something that you can do like cultures in the East do, where they pass down their precious metals from one generation to another. The price or the supposed value of this precious metal is given to us on these futures exchanges, which has absolutely nothing to do with the physical metals. That's why I always say the optimal timeline would be infinite. And then there's real estate. Real estate is one of the best possible avenues for wealth creation. Most multi-generational wealthy families own real estate. It is one asset class that can certainly persist through generations. It moves much slower than paper assets, which is a good thing. In fact, when you have these downswings, it could be extremely volatile in the financial markets, but in real estate, that might take 6 months, that might take a year or 2 years or even 5 years sometimes. So you have time to withstand those blows. It works a lot different than what we see in some of these markets where overnight you could lose everything. It allows the ability to make money through 4 separate methods. And there are some people who have been in the news for getting away without paying taxes because of the legal loopholes that real estate investing allows for. When you could write off your depreciation on the asset, this becomes extremely powerful, and you don't have that advantage in a 401k. You don't have that work in a 9-to-5 job. Risk tolerance. If you are chasing riches and you can tolerate maximum risk, there is a much faster way to accumulate money. A casino is available in most major cities. You can become rich overnight. All you need to do is find the right slot machine, be there on the right day, and stop playing at the right time. Over a long enough timeline, the chance of success tends to be very slim. Given the unknown variables, what are you willing to risk? That's all for this video. If you found it informative, hit that thumbs up button. I do appreciate that very much. If you want to build a business, if you want to make money, if you want to learn about passive income, I have a free 100% free e-course that teaches you step by step how to sell on Amazon. Check it out at the amazongps.com. If you want the financial education you were not taught in school, these 2 books have everything you need from top to bottom, A to Z, talking about the history, the foundation, making money, tax incentives, all in these 2 books. Check it out at the link in the description. If you want the audiobook, that's available at themoneygps.com. If you want to see some other videos like this that may be helpful to you, then definitely check out this playlist. Click on it and I will see you there.